above the 18,000 level is what we have on the Nifty. More on specific stocks in a bit, but Punita Kumar Sinha is managing partner and founder at Pacific Paradigm Advisors. Punita, great to have you with us here. Thanks very much. Appreciate your time. You know, the end of the year, we were expecting for quieter markets and no real big change one way or the other, but that's not the way this is turning out. Your sense on what your observations are in the US as well. You know, we seem to have begun perhaps a fresh leg down. Indices were down sharply again last night. Your thoughts?
Well, I think definitely it's a very mixed environment because of inflation, interest rates. The Fed itself, gave a basically an unexpected surprise because I think the markets were really anticipating that the Fed is going to be done, but their commentary actually surprised the market negatively. So even I think so that's really been the main reason for why we've seen this turn after the rally that happened in November. And I think now the focus is going to be on earnings because the quarterly earnings are going to be released in January, and that is going to be a very important point on which I think markets are going to be pivoting. So, for instance, right now we are seeing earnings estimates getting revised down quite sharply over the last 1 month, and the earnings revisions are sharply downwards compared to what they were 3 months ago. So markets are expecting some kind of an earning hit or reduction in earnings, and so January results are going to be very, very important. And I think, of course, the Fed has set the tone that right now they're going to keep being hawkish. But if earnings are strong, that might still offset some of the Fed commentary. I expect the markets will really bottom by the first, 4 or 5 months of the year in the calendar year 2023, because I think by then the Fed will be done. Earnings should bottom out. I don't really expect much of a very deep recession. I think the recession is likely to be shallow. I'm frankly not seeing any real signs of a recession in the US.
Okay, that's a bit of a breather, right? No real signs of a recession, and you have your sort of feet on the ground, your ear to the ground, and you know what's happening there. So it's great to hear that. But let me just draw our viewers' attention to what's happening in the market now, because the sell-off is exacerbating as we speak. The Nifty has given up on 18,000 quite effortlessly, actually, down 150 points, and it is the banks that are bearing a big brunt. IOB, UCO Bank, all the big gainers are down. Punjab and Sindh Bank, all down anywhere between 5 to 6 odd percent. And these are the volume losers this morning. Central Bank of India, Karur Vysya Bank, all down about 4 to 5%. Punita, this was a space that suddenly became the darling of the stock market, right? PSU banks. And very quickly, it's a turn of events here. What do you do?
No, I think basically this year has been about value stocks, and all the value stocks have been the ones that have outperformed. I expect that value is still going to be in favor until markets really bottom out, at which point I think investors will start shifting to growth stocks. But I'm not too concerned about the financials right now because I still see some value there as compared to some of the other sectors of the economy. But there are other sectors of the economy as well that I think are a good place to be in environments like these where there is inflation. So, for instance, infrastructure is a place that I think could keep benefiting. The real estate sector, financials obviously benefit as credit growth in India is strong. So I think right now we still should be focused on maintaining a good exposure to value stocks.
Punita, morning. Rima here. You spoke about how the earnings downgrades have picked up in the United States, particularly in the last 3 months. In India, where is it that earnings estimates have been cut recently?
And in India also, I'm seeing the same trend.
Where?
I'm seeing the same trend.
Where is it that we've seen the sharpest decline in earnings estimates, and which ones are vulnerable going ahead as we enter into the earnings season?
I haven't really focused in on which ones have had sharper declines in earnings estimates. I think there's been broad-based earnings declines, on the estimate side. As I said, I think typically in environments like this, where growth stocks are generally risky, and that's what we've seen. But as I said, in the next 3 to 6 months, one should be building positions in growth stocks and shifting a little bit out of value. But for the moment, you stay put in value stocks. Now, the one interesting thing I wanted to mention, I was looking at this table of emerging markets performance and developed markets. India actually on value scores really poorly. It's one of the worst in terms of value ranks. And in terms of growth, if you look at EPS growth estimates for India for 2023, they're the highest of most emerging markets, even compared to most developed markets. So I think, and also from talking to the companies that I'm on the boards of, I'm seeing everybody is really focused on India as a growth part of their portfolio. And so whether it's manufacturing, capital goods, infrastructure, real estate, all of these sectors will benefit from more and more manufacturing, or at least the potential of manufacturing to shift to India. That means capacity will be increased. And so everything related to that will benefit, including the banks, because then there will be credit growth related to all these sectors.
IT, Punita, is this a good time to be buying IT, or would you stay away?
I think the valuation in IT has become reasonable. Of course, I would wait for the earnings growth, because we're going to have, second week of Jan is when most of the IT companies start reporting. I think the commentary is obviously going to be not as optimistic as it's been in the past, especially because of what we're seeing in the US as well. But I expect that after the earnings and any reaction to the earnings, one should start looking at maybe getting back into some of these names.
Would you look at large cap or mid cap IT?
At the moment, given the environment, I think large caps are a bit safer.
Okay, safer to stay with large cap IT names. Got that. Since you're not expecting any major recession in the US, I reckon you're not even expecting a large sell-off in the Indian markets. What then do you think the trajectory would be over the next 6 months? Do you think we'll be in a painful or time-wise correction, if not price correction?
Yeah, so first of all, on recession, while most economists are expecting a recession, and most people are, of course, saying it'll be a shallow recession. And right now, other than some of the layoffs that we've seen in the US, in the Christmas period, the sales that have happened, retail sales have been very strong. Restaurants are full. Travel, it's hard to get flights. So, it doesn't feel like a recession at the moment. Now, whether a recession will actually come in the first quarter or second quarter, that's at the moment hard to see how things could change so sharply downwards, but they might. But I think it would be shallow. Now, in terms of India, in India, I think the inherent growth story is there. So I don't expect a very deep recession in India. And now, in terms of what happens in the markets over the next 6 months, as I said, earnings are going to play a very important role. So we should, the Fed commentary, I think we know what that is. So that's kind of getting priced into the markets, that it's hawkish. So I think the real focus is going to be on earnings. As I said, I expect in the next 3 to 6 months, markets will bottom. Whether you call that a time correction or a price correction, I don't know, but there may be some more correction. Given definitely there'll be volatility for sure.
All right, we will leave it at that, and Happy New Year to you, your family, your team. Thanks a lot for joining in. Hope you have a great year ahead.
Thank you. And Merry Christmas. We are all wearing red today.
Yes, we are. And we, at the start of the show, we put out a disclaimer saying, you know what, this is not to gauge the mood of the market. It's purely for Christmas cheer. So I hope our viewers got that. Thanks, Punita. Always a pleasure speaking to you. And have a great year ahead.
Thank you. Thank you.
Okay, well, let's move on from the markets and talk to some corporates now. Bata is one stock in focus. The stock is down 11% this year. Higher raw material costs, weaker demand has hit the earnings performance. To discuss where Bata stands now and how the second half of FY23 is shaping up, Gunjan Shah, the Managing Director and Chief Executive Officer at Bata India, is joining us on the show. Mr. Shah, good morning and thanks a lot for joining in. I wanted to start by asking you